Good evening and thank you for joining us again on the program Capital Market. I'm Temple Ashaju. For the next half hour, let's drill down into the capital market off the trading floor of the Nigerian Stock Exchange and of course the FMDQ Securities Exchange place. But let's begin first with an update coming from the NSE, where this week the NSE, the Nigerian Stock Exchange, announced the appointment of internationally renowned award-winning artist Innocent Idibia, popularly known as TuFace or Tubaba, as its good cause ambassador. During the unveiling ceremony on Tuesday, August 6, 2019, the exchange says the appointment will see to Mr. Idibia lending his voice to raising awareness and mobilizing support for the corporate social responsibilities and sustainability initiatives of the NSE.
The NSE is uniquely positioned to influence listed companies and the economy at large. Hence, communication on our sustainability efforts is critical to influencing change towards achieving a sustainable future. Today is yet another historic day for sustainability at the NSE as we appoint our first NSE Good Cause Ambassador to amplify our progress on sustainability and raise awareness on issues relating to sustainable development. We are pleased to welcome award-winning artist TuFace Idibia. Through his music, he has promoted a consistent social message on peace and good governance. As an icon of the Nigerian music industry, he has remained an inspiration for various generations of Nigerians at home and abroad. As a sustainable exchange championing Africa's growth, we will continue to implement impactful initiatives that promote the actualization of the Sustainable Development Goals. With support from TuFace, our new Good Cause Ambassador, we will spread the message of sustainability much further than we would have done by ourselves.
The Nigerian Stock Exchange, in alignment with the United Nations Sustainable Development Goals, continues to execute various sustainability initiatives: community, marketplace, workplace environment. Those are the 4 pillars, and it pleases me to lend my voice to this cause. It pleases me to be invited to be part of this massive movement, and to be recognized by a formidable and reputable organization like this. I do not take it for granted. I'm not going to take it for granted.
Well, the central bank resumed its OMO auctions this week after a 3-week absence, with a total of 114.6 billion naira against some 75 billion naira offered at the last auction and sold across just 2 tenors. That's 85 days and 344 days this week. So compared to the last auction, 1-year stop rates was about 25 basis points lower, printing some 12% to thereabouts. And at the secondary market, however, average yields rose by some 84 basis points week on week to 13.12%. That follows the upsurge that we saw around the treasury bills bond space and, of course, the bond space, where we saw some kind of 40 basis points week on week performance, which settled at 13.83%. But basically, let's join the Nnamdi Olisailoka for some insight into the pressures that we're seeing in the fixed income market and how he thinks the regulators are handling it. Thanks a great deal for joining us on the program this evening. Nnamdi, good evening to you.
Good evening, Temple. Thank you for having me.
Sure. So let's begin with what we've got. I mean, the trading week, this period, we saw a whole lot of sell-off by offshore investors. The reasons are not far-fetched. It's looking like Nigeria is facing the implications of the low crude oil price that we're seeing.
Yes, you're very right. So prior to this week, 2 weeks prior to this week, we've been having the Treasury yield curve compress. There's been strong demand from local investors. What really happened was, at the last bond auction, the DMO undersold. They sold only about 85 billion whilst they offered to sell about 145 billion. So that kind of, and the CBN had prior reduced the speed of OMO issuances in the market. So there was an undersupply of securities, and we saw strong demand from local investors supporting the market. But coming into the week we just passed, we discovered that there were risk-off sentiments in the market coming from the escalating tensions between the US and China, and we saw oil prices plunge below $60 per barrel, which you know is the budget benchmark. So that kind of situation began to dampen the risk sentiments from the local investors. So the kind of support we have been seeing from them, the strong demand from the PFAs and some dealers in the market, began to wane due to those risk-off sentiments. And as offshores continue to sell off in the market, given those tensions that were occurring, we saw yields begin to trend higher across the treasury curve, both the bond and the treasury bills market. We saw aggressive stops across the curve, yes. Let's
go by the slides that we've got. We'll talk about the macroeconomic update as it relates to these developments that we're seeing in the markets. Total pension fund assets rose, I think specifically in the month of June, by 101 billion naira to 9.33 trillion naira. What's the implication of this on the markets?
Yeah, so PENCOM released this on Friday, the update as at the 30th June, what the total pension fund assets. So what we really saw from those figures is that for government securities still contains the bulk of the investment by pension fund assets. About 70% of pension fund assets are invested in government securities, but we saw a kind of decline in the amount of, in the value of investment in FGN securities compared to the month of May. And where we saw money going into was into cash. We saw money in cash increase from around about just 10 billion in May to around 214 billion in June, whilst there was also a slight increase in corporate bond holdings by the PFAs. So what we really understand to warrant this would have been the decline in yields within the treasury space would have seen investors putting some money on the sidelines with expectations of higher yields going into the year end, whilst also trying to cherry pick on higher yields in the corporate bond market. Then we saw equities decline. So that decline would most likely be attributed to the weakening in the sell-offs we have been witnessing in the equities market. So those are the basic differences between the figures we saw in May and the figure we saw in June.
There's been an overall weakness, weak sentiment basically in the equities market, that we know. But then again, given the oil price that you explained by this next slide, it's talking about Brent crude price plunging below 60 basis points, $60 per barrel rather, amid the escalating trade tensions. That seems to be cutting across the entire securities market right now. Is that due to the fact that these foreign investors are scared of how Nigeria now has a crude oil price, going below its $60 per barrel benchmark for the budget?
So basically, the plunge in oil price is a consequence of the escalating tensions,
sure,
which is impacting global oil demand. So as the prospects for global growth begins to wane, we're seeing it impacting commodity prices, and offshore investors are becoming risk-off on emerging markets. Then locally, the central bank has told us that once oil begins to plunge closer to $50 per barrel level, they become a little more cautious. They become, because at that level, it begins to dampen their reserves accretion capability. So all those things put together, it's negative for the market.
Okay, so we now know that there's been a decline in our external reserves to $44 billion.
Yes, $44.6 billion, and it's because the CBN has had to come into the market and intervene to support the Naira. So we've been seeing sell-offs by foreign portfolio investors. These guys need to take out their money out of the market. And the liquidity in the market by the dealers and the banks is not sufficient enough to meet their demand. So CBN has been using its reserves to support the currency by selling to these foreign investors.
We understand that there was a lot of intervention in the month of July as well, and that seemed to have been what contributed to the marginal increase that we saw at the I&A window when you talk about inflows, because what exactly we saw was just $1.9 billion or thereabout at the I&E window. So if we discount the CBN interventions, what would you say is responsible? Will it still be these trade tensions, because we didn't really see so much of trade tensions in the month of July?
So exactly. So yeah, the weakness, the thing is, as treasury yields declined, foreign portfolio investors became less attracted to the domestic securities. It became less attractive to them because what's really the real yields and what's the carry? The carry contracted from the decline. We saw the CBN is trying to pursue growth, domestic economic growth. Yeah. It's trying to compress, decrease the domestic level of domestic interest rates. So all those things made the carry from offshore investors become less attractive, and there was a lesser level of foreign portfolio inflows into the market. So that decreased the amount of liquidity in the market. So when there is not sufficient liquidity in the market, demand for foreign exchange is not met by sufficient supply. So it began to push up the prices. And in this month, things have become more aggressive because foreign portfolio investors are not just bringing in money. They're no longer bringing in those funds as they used to, but they're also selling down on their holdings and repatriating their funds.
So the NAFEX rate has hit 6 months high at some 363 Naira per dollar. That's worrisome indeed.
Yeah, so to an extent, you can say it is because we're not just looking at the near term, but what's the long-term range of the rates will be like. A lot of people are worried about what the stability of the Naira will look like going forward, even a year from now, 2 years from now. Businesses have to do their projections. We are worried what will happen to the Naira. Yes, but the CBN has said that they are going to do all they can to ensure the stability of the Naira. They will do all they can to support it, and we've been seeing them doing that. They have robust reserves currently, and we think they will continue to use that. And if push comes to shove, the CBN might have to increase the fleet of own issuances, or maybe likely at higher rates to continue to attract those foreign portfolio investors.
Especially when it is we're likely to see maturities of some 9.6 trillion Naira or thereabout between now, August, and December.
Exactly.
So we're going to see a high
and the bulk of that are held by foreign investors.
Okay, so let's look at the week ahead, actually. You've got the DMO paying some 47 billion Naira coupon for the FGN 2020 security. That's on the 14th of August. Inflation numbers will be coming in. 49 billion Naira multi-bills mature on 15th of August. So more than 100 billion Naira or thereabouts will be going out next week.
Yeah, exactly. Coming in, actually. So
okay, coming in
the bond market, investors will receive coupon on the 2020
for you,
bond.
it's coming in.
Yeah, it's coming in, yeah. For me, for us, it's coming in. So definitely there should be some support for bonds in the market.
Right.
Investors will want to invest this coupon payment, so there should be kind of support. And we have seen the local investors being interested in bonds at plus 14% levels. So once the bond yields get to levels above 14, PFAs, local investors are comfortable investing at that particular level. Yes, so we think that there will be slight support for bonds coming into the week. Then there will be an auction by the CBN, about 34 billion. We'll have 4 billion on the 91 day, 10 on the 182 day, and about 20 on 364 day. We think that stock rates will clear significantly above their previous levels because of the recent bearish trend in the market. Then on Thursday, OMO T-bills will mature. I can't say for sure that the CBN will conduct an OMO auction because the system liquidity has been constrained recently from the continued interventions by the central bank. So there's been kind of drain in system liquidity. So even when OMO T-bills mature, the CBN may or may not conduct another OMO auction. So that's left for us to see. Then on Thursday, we expect the National Bureau of Statistics to release the inflation figures. And consensus expectations from analysts is that there will be a decline. But there's some kind of, we can't say it as to the exact amount of decline. There are predictions are as low as 10.98, 11.01%, and some analysts are saying 11.1%, some are saying 11.2%, but definitely there will be a decline, and the decline will be spurred by the early harvest we witnessed and decline in food inflation.
For you at Z-Crest Capital, actually, do you see Nigeria achieving a single-digit inflation rate at all?
I don't see that in the near term.
Looks like you guys have a consensus around that. But let's look at the fact that this crude oil prices are actually declining. It's been tail spinning. I mean, how long do you see that going?
So the issue around crude oil, the dynamics in the market is that the investors are very worried. The crude oil traders are very worried about the prospect for global demand for oil. If tensions escalate further between the US and China, it will impact global growth, which you're already seeing. Analysts are already speculating a recession coming soon. So all these things are making investors slightly bearish on prospects for oil. We do not know how effective the efforts by Saudi Arabia and the OPEC to cut oil supply will be. But we think that going forward is still a very tricky situation for us.
Okay, well, so we should just say that, I mean, this risk of sentiment is not a Nigerian thing alone. It's a general thing. It's a global market thing.
But we remain very vulnerable because of our over-dependence on commodity prices.
I know the federal government knows that.
Yeah.
Thanks a great deal, Nnamdi Olusoyaluka, for your time on the show. Thanks for these wonderful insights. We appreciate your time, as always. Nnamdi Olusoyaluka is a research analyst with Zcrest Capital. But like we said, and like he also agreed, the NBS has scheduled Wednesday, the 14th of August, next week, to release the inflation report, the CPI. And of course, you should find out after this break what analysts are saying will happen to a single-digit inflation rate. Welcome back to the program. It's Capital Market, off the floor of the exchanges that we have in Nigerian market now. Well, on a monthly basis, the financial media holds a session with analysts to get a sense of direction of the market for every month. Well, this week we start with the head of research at FSDH Group, Yodele Akinwumi, who shares his outlook for the securities markets in relation to the month of August.
2019 inflation rate to drop to 11.01 from 11.22 recorded in the month of June 2019, thanks largely to the harvest season, which is driving the inflation rate downward. As noted in our previous inflation reports, it is unlikely that Nigeria will achieve a single-digit inflation rate in the short term. The average price of burning light in July 2019 stood at $66.24 per barrel, compared with an average of $66.52 per barrel in June. That's a marginal decrease. However, in the last few days, crude oil price has dropped below $60 per barrel as a result of the trade tensions between US and China, which has impacts on the global economy. This may have negative impact on the revenue and other key prices in Nigeria. These key prices are exchange rates, inflation rates, and of course the central bank, if there are issues around those areas. I mean, we're beginning to see a declining trend in external reserve now, just because of the low inflows from the oil receipt and also the foreign portfolio investment that are coming to Nigeria. And therefore, if this trend continues, there may likely be an adjustment to the exchange rate, and of course the central bank may want to adjust the interest rate and yield on fixed income securities to counter the effect of this. The external reserve did continue on its downward trend in July 2019. The decrease in the external reserve may be attributed to low crude oil price and lower foreign portfolio inflows. There was a marginal increase in capital importation via the investors and exporters foreign exchange window in July 2019, following a drop in the month of June. However, we note that central bank intervened in that market in the month of July, while it did not intervene in the month of June. And therefore, if we adjust the central bank's intervention, we will see that the total foreign exchange inflows through the window in July was actually a decline. The total capital importation through the RNA window in July stood at $1.96 billion, marginally up from $1.91 billion in the month of June. FSDH Research expects a total inflow of about 1.54 trillion naira to hit the money market from the various maturing government securities and the FAC allocations in the month of August 2019. We'll estimate a total outflow of approximately 1.45 trillion from the various sources, leading to a net inflow of about 89.81 billion naira in the month of August. Between August and December 2019, FSDH Research expects over 9.6 trillion naira worth of government securities to mature into the financial market. The CBN may use open market operations, OMO, to mop up this expected huge liquidity in order to maintain price stability in the financial market. And that will mean that they will need to tweak the interest rate and the yield on the open market securities upward between now to enable them soak the expected huge liquidity so that it doesn't cause instability in the financial market. The Nigerian Stock Exchange All Share Index depreciated in the month of July 2019, recording the largest month-on-month depreciation in 2019. Looking at the historical trend, the equities market has depreciated in the last 6 years between July and August. Although FSTH research believes the equities market is oversold at the current level, the recent developments that led to the downward trend in the crude oil price may lead to a downward pressure in the equities market. Nevertheless, investors should continue to buy value stocks that have historical history of good dividend payments. They should also maintain a long-term view of the equities market.
Akínwùmí Oyèdélé of FSDH group over there. Of course, next week there's a whole lot for investors to really watch out for. We know that the stock exchange is currently planning to list Green Age Alpha, which is a security that will become tradable on the Nigerian Stock Exchange eventually. The market has in recent time also been experiencing the release of a lot of earnings, save for the Tier 1 banks whose numbers are yet to come into the market. We're still waiting for a lot of Zenith Bank, Guarantee Trust Bank, you've got Access Bank, and a host of other Tier 1 names, coming into the market. The only bank whose H1 has now been released is that of FBN Holdings. And of course, I came fulfilling the promises that it had made to the investing public around the need to reduce its debts. And of course, the NPL ratio all the way from 25% to 14%, which is what it is standing at right now. They do hope that they will be able to achieve a single-digit NPL ratio. That's something that a lot of investors, market watchers, and of course traders are really tracking in the markets to see how that will change the paradigm for FBN Holdings, especially the share price, and so it can help them do get some good price appreciation in the market. So there's a whole lot of things to watch out for next week. We've got the DMO also paying some 47 billion naira in coupon over the FGN 2020 security. Next week, Wednesday, 14th of August. You also have the CBN auctioning some 34 billion naira government treasury bills on Wednesday as well. And of course, 49 billion naira OMO T-bills maturity on Thursday, 15th of August. That is also next week. Finally, the National Bureau of Statistics will be releasing the July inflation numbers on Friday, 16th of August or 14th of August, either 14th or 16th. There's a whole lot to actually watch out for next week. And of course, here on Channels Television, your news leader will be bringing you all of those details as they are trickling into the media. That's it on the program for this weekend. Thanks for watching. I'm Temple Ashaju. I'll see you next time. Bye.